Gap Island reversals. Hi, this is Charlie giving you Wednesday's video. Hope you're very well. The S&P did a Gap Island reversal yesterday, well, over the last 3 days basically. A Gap Island reversal, if I just draw it on, is where you get a bar, first of all. In this case, a down bar. It can be the opposite way around as well, of course. Then you gap down, have a candle, and then you gap up the other side. That would be a Gap Island reversal. We just about got it here. This is the cash market of the S&P. We gapped down. It didn't quite fill the gap. You don't want it to fill the gap. You want it to be left there. A bit like Hugh Grant in About a Boy. No man's an island. I'm an island. I'm Ibiza. Something like that. Here's Ibiza down here. So you don't want it to have filled the gap. It didn't quite fill the gap because to fill the gap it needs to go up and hit the closing price. So it wasn't quite. So it's a close call, but anyway, it is technically a Gap Island reversal. So we have got that. So what does that mean? Well, it means that we could get a follow through to the upside. I talked last week about some of the breadth readings that we were getting and that the breadth was improving slightly. Looking at the McClellan, I'm looking at the put-call ratios, I was looking at the TRIN index as well. So there is scope for more follow-through to the upside after having something like a Gap Island reversal. This is the cash market. I'll actually go to the futures so you can see what the actual live prices are doing right now. You can see it's up, still following through at the moment. Now, what does this mean for, where do we go from here? The market's cheering some of the more stimulus that's been agreed out in the US last night from over with Congress. And the markets, bear in mind, are always forward thinking, they're always forward pricing. So when you're in the depths of a recession, we are not yet, but usually the markets always bottom, traditionally sort of 9 months before the end of a recession. And likewise, stock markets tend to fall before we've even got into a recession. So the market's always forward thinking, forward pricing. So could it be that that's it? The markets are down, globally 30 odd percent for a lot of the markets. Some markets are more than that. I think the FTSE was down 40 odd percent. Could that be it? And we're going to start the process of a recovery here in the stock markets. You could argue that we are still in the depths of our coronavirus outbreaks here in Europe and in the US. But from what we've seen in China, could it be that, they've got on top of it and maybe we will start to do that as well, and then everyone gets back to work properly and in the coming months, and then the markets carry on moving higher. I'm just throwing this stuff out there, by the way. So possibly the markets may well do that. Now, technically, as the market retraces, this is a downwards trend. So as it retraces at certain points, depending on what sort of levels you might use Fibonacci, you might use pivots, you might use moving averages, you might use whatever technical levels to sell if you're looking to sell the next leg, sort of thing, this next leg up. And no doubt there will be up moves and there will be down moves within this. No doubt that there will be down moves. So we'll have to see whether the stock market has indeed done a bottom. If I take this out to a monthly chart, you really start to put it into perspective of just how far it had come down, the S&P. But relative to, I've been saying this for a while, relative to the move that it's had over the last 10, 11 years since the 2009 bear market lows, it's breached the lows of 2018. And yes, it's a nasty sell-off, but for investors who have been in the market for a long time, it just meant that it shaved some of their profits off, and that's about that. So could it be that we've got more upside? It could be. No one really knows what is coming with regards to the virus and how we get on top of it, and we know the economic impacts are going to be huge, but the potential, although the economic figures coming out over the coming months are going to be abysmal, the market knows that, and so that's hence why the market's been selling off as much as it has been. So but don't get me wrong, there will be secondary waves and retests, and usually there are retests of the lows. Now, it doesn't necessarily mean market has to come down and get all the way down to the lows or even breach them. Sometimes it can just be a retesting that it comes down and does a higher low. So all of these are, it's all hearsay right now. So all I can always say is just focus on your setups, your trades, and don't worry about the forecasting. Leave that to the analysts. Just remember that all these analysts and bank analysts out there, they don't trade. They're economists. You know, they're not putting money on the line like you are. So you need to trade what's most comfortable for you. You can listen to the talking heads and whatever they may be predicting about the markets, but none of them will be completely 100% correct. And there is a massive difference between analysis and putting your money on it. I see this all of the time. You see people who can do great analysis, and you've got all of these talking heads who will give you all of this great analysis, but they're not actually putting money on the line with this stuff. So whereas you are, so just trade what's comfortable for you. If you're looking at something like the stock market indices, whether it's the FTSE, DAX, S&P, whatever it might be, and you just don't feel comfortable, you don't have to trade it. So I was trying to trade it yesterday. I was about 10 points off getting long down here. It was at 2300 during the day. I wanted to get in at 2290 and missed, and it didn't get there. The lowest it got was 2300. So missed out on that. But that's real trading. That's the reality of trading, is that you don't always get filled, and you have to trade at your levels and with techniques that are comfortable to you. If you start trying to trade just because this market is exciting and some talking heads are saying X, Y, and Z, then that you're going down the wrong path. Stick to your strategies and what is comfortable for you. There you go. That's my Wednesday video done. I shall see you at the end of the week. Take care for now.